Good morning, everyone. Today is Friday, March 3rd, and this video is especially for people who scalp trade. Are you a scalper? I think most people are scalpers, right? Most traders are scalpers. Now, it's a fact that most traders, almost 90% of traders, don't make money. And I would say that almost the same percentage are scalpers. Is there a correlation? I'll get to that question, to the answer to that question in a moment. But let's start today, and I always start the day, looking at the economic calendar to see if there are going to be any announcements that are going to move the market. And today, March 3rd, Institute of Supply Management is not, Dallas Fed report is not, S&P Global's U.S. Services is not, so we can disregard any announcements that are going to tend to move the market. Prices are generally in the green. Flags are in the green. Futures, the Dow, S&P, NASDAQ. Oil and the 10-year Treasury. 10-year Treasury has been troubling because it's up at 4%. And that is a red flag for equities. But we'll get to that in another video. But let's go back to our chart. If you're a scalper, let me suggest why it's so difficult, nearly impossible, for you to make money, at least on any kind of consistent basis. You'll make some, you'll give it back. And here's why. This is the chart from yesterday. And I have the previous day's close. I always put the previous day's close on my chart, and so should you. And I always put my calculated Taylor trading technique numbers on my chart. The Taylor trading technique, and for those of you who haven't seen any of my previous videos, George Taylor developed a series of calculations that try to determine where the market is going to trade on any given day. And I'm not going to go into the technical aspects of it, but trust me that most professional traders all calculate these numbers in preparation for their trading day. So I put these numbers on my chart, and I have them in conjunction with, or in addition to, the previous day's close. And these three numbers, these three levels rather, are targets. These are targets that the market is likely to hit or have some kind of interaction with on many trading days. Not every trading day, many trading days. Now, let's get back to why scalpers can't succeed with any kind of consistency long term. This is a 3-minute chart. Each candle is 3 minutes. There are 4 points between each horizontal line. So 4 points, $50 a point for the S&P E-mini futures. And so that's $200 between each horizontal line, okay, per contract. And so there are, looking at these candles, what would you say the length of an average candle is? Well, the average candle here is about 6 points. 6 points is the average candle. And if you're a scalper, what you're relying on is getting in at the bottom of a candle, and let's say you trade for a 3-minute time frame, which for a scalper is an eternity. But let's say you trade for a 3-minute time frame. You are just as likely to get on one of these candles in the middle of the length of the candle, where it's going to go either in your direction or against you. So immediately you're either going to be stopped out or underwater in the red, or your profits are going to be minuscule. And they're going to be minuscule, and then the candle is going to reverse, and then you'll be underwater, you'll get stopped out. And the reason that you'll get stopped out is because of what you've learned in trading schools. All trading schools teach the 1% rule. Risk no more than 1% of your trading account. So let's say you have a $20,000 trading account, right? So 1% of that is $200. So 1% of that, with these 3-minute candles, each horizontal line being $200, if you, and you likely will, if you lose one horizontal line's worth on a trade, you're out the 1% rule. And you're finished. Your trade is done if you follow the 1% rule. The 1% rule is taught by every trading school. I teach the 1% rule. Why? It's conventional. It's safe. It doesn't work. Trust me, it doesn't work. You have to look at a bigger time frame. You have to assume greater risk. And if you're not prepared to assume a greater risk, you have to do one of two things. Either you have to change the way you trade, or perhaps switch to micro E-minis. Micro E-minis is $5 a point, and it'll give you the rush of trading, and you know what I mean by the rush of trading. At the same time, it'll give you experience in how to trade. Most importantly, I want to point out a couple of things here on this chart. Prices opened up yesterday at 39.35, and the gap was up here at 39.57, so that's a 22-point potential profit. Very nice profit. But look what happens to the scalper. The scalper trades, doesn't have my trading zone, so doesn't know that when the prices hit my trading zone level, one of my levels, in this case it's the support level at 39.41, something is going to happen. For me, I get on this trade, and as soon as prices move up here, I get off. Even though I've made money, I've made 7 points, I get off. Why? Something's going to happen here. Guaranteed 99% of the time, when prices hit one of these tailored target numbers, something's going to happen. And what happens is prices are going to back off, going to reverse. And if you don't have these numbers, you don't know it. So what happened, look right over here, and if you see carefully what happened here, as soon as they hit this level, they reversed down, went back up a little, hit the level again, and then went all the way down to 39.34 to 39.35, just at the same as the open. So that's how the scalpers lose money, because they don't have these numbers. You have to know this number. Now look at another example of that is right over here. When prices are playing around with these target lines, something happens, folks, and I don't trade this. I know that I want to trade long. Why? Because I want to take advantage of the gap play, because that's a very, very successful play that has been successful 70% of the time. But look at the volatility that the market put in. When did I know that this gap was going to be successful? Certainly I didn't. All I knew is that the trade from where the market opened to up here at 39.41 was going to make about 6-7 points. Great, 6-7 points. Nothing wrong with that, folks, right? But then the market was vacillating, playing around up and down at the target line of 39.41, the calculated target line. Remember, you don't have this on your chart. When did I know the gap was going to fill? Somewhere around over here. Even over here, I suspected it. But the gap didn't fill until afternoon. Now, not everyone trades in the afternoon, but still in all, the market, when it retreated here, it retreated when it was playing in the no man's land, actually not a no man's land, but the range. There was a 37-point range yesterday in my Taylor numbers. When the market was trading in this range just above my calculated support, notice it didn't when it penetrated the support, and it never tested that again. So I had a pretty good idea. Price's next target, remember these lines are targets, the price's next target was going to be the gap. Sure enough, ta-da! What happened after that? Get off. Because if you don't get off, look what happened. Oh, you went up here, 39.66. And for those of you who saw this and it happened quickly, oh, gee, look at this. The market went up. Market's going up. So they jumped on. Market went like this. Boom. Quickly took their money, right? I won't go into the rest of the day. Rest of the day worked very well for me. But you need to have the Taylor numbers. If you don't have the Taylor numbers and you're going to trade as a scalper, trust me, you're not going to be able to stay in the game. If you're playing the 1% rule, if you're obeying the 1% rule, folks, it doesn't work. I wish it did, but it doesn't work. The big boys can afford these major pullbacks. Most of us can't. Okay, so that's my video for today. If you want these Taylor numbers, you can get them by subscription on my site at timelessdollar.com. And I'd also suggest you pick up a copy of my trade record keeping chart that helps you keep metrics, helps you keep score of the things that you need to know in order to perfect your trading technique. That's my video for today. I'm Marv Eisen of Timeless Dollar Trading Academy. Trade safely and remember to use lots of patience. Thanks so much for watching, and I'll see you in my next video. You're going to want to shoot for two goals as a trader. The first, of course, is profitability. The second is consistency. Without consistency, you're not going to be able to stay in the game. Whether you make money or you lose money is a result of your trading metrics. So what do I mean when I talk about trade metrics? This spreadsheet gives you an example of the information, the metrics that you need to keep track of in order to become a consistent trader. The two metrics that are particularly important that you're going to want to improve your performance on are represented in this spreadsheet right here. The number of winners per day, the percentage, and you want to keep this around 70% if you can, and the cumulative average income or loss per trade over time. Keeping these metrics takes a little bit of arithmetic, and you need to do it at the end of your trading session each day. This spreadsheet provides the metric calculations in an automated format. We enter the date. Let's say we make 7 trades, and 4 of them are winners, and on those 4 winners, I earn $300. The percentage of winners and the number of losers and the percentage of losers are calculated automatically. I also enter the amount of money I lost on my 3 losers. I lost $125, okay? So entering that, the spreadsheet automatically calculates the other metrics in order to automate the entire process. Everything on this sheet is what you need and what will tell you whether or not you can become a consistent trader and will help you improve your metrics. And again, the most important critical metrics are the percentage of winning trades and the cumulative average per trade. When I say cumulative, I mean over time. Anyone can make money one day, 2 days, but over time is the key. I created this spreadsheet and it's automated, and all you need to do is enter in the white columns the total number of trades for the day, the number of winners, the total profit, you enter the loss, and everything else is calculated automatically. I've made this spreadsheet available for you to download. If you'd like to have it, it's only $10, and you can keep these trading metrics very easily without undue arithmetic on your part. You can find a link to purchase this spreadsheet at my site at timelessdollar.com.